everyone. This is another episode of Crypto and Cocktails, the official 107capital podcast. As always, I'm Tyler. This is our man of the hour,
Tim.
And this is our return episode. We've been away for a little bit, taking care of some stuff. We'll get to that, what we can say, obviously. But now we're back. We're looking forward to a new outlook as things go forward for the rest of the year. We'll talk some more about that as well, but happy to be back.
As Dre would say, we've been in the lab with the pen and the pad.
Yeah, exactly. But we'll get to that in a bit. I want to get right to our customary drink first. I decided to go with an oldie but a goodie, simple rum and Coke.
Delicious.
Love me some Coke.
Reminds me of vanilla Coke at Waffle House.
It does have that kind of vanilla taste to it, yeah.
It does. We used to go to Waffle House all the time, right after going to Georgia Tech. And I love Waffle House, huge fan. Hate it or love it, doesn't matter. Waffle House is delicious.
Oh, yeah.
And
it's the second best restaurant in the country.
I just remember going there for the first time, and my one friend was like, dude, you gotta try vanilla Coke. And I'm like, what's vanilla Coke? And they added the vanilla into the Coke at the Waffle House, and I was like,
I love it.
Oh, this is so delicious. And up until that point in time, because I grew up in Buffalo, New York, I was a Pepsi drinker because Pepsi dominated everything. And then at that point in time, like, I gotta go over. I'm kind of going on this side of the wall now. So
New York was like, I mean, where was the lot? Because we hear all the time. We hear
JA-17, baby.
Mm-hmm.
And the rest of the squad, obviously.
But we hear all the time about how, like, you know, like in the 80s and 90s and whatever, there was this big race between Coke and Pepsi. Like, where were the lines? Like, what parts of the country, you know, liked Coke more? What parts liked Pepsi more?
Basically, it was centralized around distribution centers. But at that time, they had this Coke versus Pepsi challenge.
Yeah.
And Pepsi actually won.
Yeah.
Like, I always liked the flavor of Pepsi a little bit better than Coke.
Mm-hmm.
But then again, I didn't drink original Coke that had cocaine in it, so I can only imagine what that looked like.
Oh my god! I mean, they used to use it for. Didn't they used to use it for like cleaning cars?
I think so.
I think wasn't that like a famous like life hack back in the 80s or something? You could use Coca-Cola to clean your car.
You could get the rust off your car battery with it, yeah.
And then everybody's like nowadays everybody's like, oh my god, what's in this stuff that you can use it to get rust off? Like, what are we putting in our bodies and whatnot? But like, I mean, it's a chemical.
Well, I mean, you look at the back and forth with what's his face, RFK Jr. And now they're going to change the formula to Coke to be more human body friendly. Getting
rid of the high fructose corn syrup.
Yeah, for sure.
Mm-hmm. I don't know for sure if they're putting in like what they used to, which was cane sugar, or if it's going to be like an additive. I've heard it's going to be an additive, but like it'll
probably be an additive because that's the only way you could probably mass produce it cheaply.
I mean, that's why they went from cane sugar to high fructose corn syrup, just because it was cheaper. It was much easier to mass produce.
Right. And yet somehow Coca-Cola has not gotten cheaper through the times.
Yeah, exactly. I mean, nowadays,
shame on you.
They used to, you know, sell them in these fancy glass bottles, and now it's in like this plastic.
Yeah, plastic. You don't get the glass bottles. Although when you find the glass bottles, I buy a bottle every time. Anytime I see those old school glass bottles, I'll buy it.
And if you go to like a traditional diner, like those traditional dining establishments, you know, it's like they're themed after like the 50s diners or whatnot.
Yeah.
Almost always they'll have those.
Yeah.
Like, you ever been, I don't know if anybody here's heard of it, but there's a place it's my favorite diner. I don't know why my favorite diner is where it is, but nothing can beat it. I've been to like, you know, tons of these different types of places, but you ever heard of the Silver Diner in the Baltimore airport?
Oh, I love the Silver Diner.
Silver Diner's amazing. I don't know why, like, the country's greatest traditional diner is in a freaking airport, but
somewhere in one of my boxes somewhere, I have a coffee cup from there.
Really?
Yeah, I used to fly a lot of Southwest when I was in corporate world.
Mm-hmm. Before they, you know, became terrible.
Yeah, in the beginning. And
COVID.
I used to fly through Baltimore all the time, and I used to go to the Silver Diner all the time. Love that place. Although now Baltimore Airport's overcrowded. I mean, come on, man. You guys need a lot more restrooms in there. It's disgusting.
It's probably...
We're critiquing airports today, but we just...
No, I like the little banter at first, but I mean, Silver Diner is definitely in my top 10 of restaurants. Like Waffle House is I maintain, even though it's a chain, it's like there's so much heart in it. Like the food is amazing. It's unlike any other fast food chain, if you can even call it a fast food chain, because
This is
they
why
make
you
it.
need like your own Instagram account for people to follow.
Maybe. I mean,
Tyler's favorite spots.
you've got one. No, I went to a place just yesterday just to try it. They opened a new tavern right down down the street from our studio.
Yeah.
I think it's called the North Deering Tavern. Pretty simple place, but it's I mean, it's simple. It closes really late, and they sell the food all the way up until then, so you could just go anytime. And my God, it's so good. It's so simple, but it's so perfect. They make it with a lot of love in there.
Cool. We'll have to try it out.
And apparently, I looked on their website. It's made by like a couple brothers. It's like they run a bunch of different restaurants in the Portland metro area, but it's basically like a team of two brothers that are the restaurateurs for it. So it's family owned too.
Yeah.
It's nuts, but
Very cool.
I'm trying to think. I think it's too new for me to confidently place it on the top 10, but it's definitely up there. But yeah, Waffle House is.
Just follow his new social media account. He'll post it.
Yeah, I should make one. But no, Waffle House is definitely my number 2. Solid number 2.
There we go.
You're smirky because you know what number 1 is.
We're not going there.
We're not going there.
Yeah.
I'm sure
On to
I've.
bigger and better things. Let's get to the reason why we're here.
I'm sure I've mentioned them in a previous episode. I'll probably mention them in a future episode. But yes, on to bigger and better things. So, obviously, like I said, we've been away for a little bit. Now we're back and we have a new outlook on things. A lot of bold new projects that we're going to be putting out. Obviously, the podcast is back.
Expansion.
Our shorts are going to be back. All that's going to be back. I'll talk about, from a social media perspective, what kind of content you guys can expect to see from us, from our company. But Tim, you kind of want to talk about, where we've been, what you can say about where we've been and, where we're going, the kind of projects that we're working on?
Yeah. So this is for everyone out there in the financial community and anyone that has money of any sort, right? So our message and our services now have expanded to be inclusive of pretty much everyone. So here's the deal of it, right? We evolved out of a traditional wealth management firm. I can say, as someone that's been on the forefront of finance for over 20 years now, when you see Ken Fisher talk about being a fiduciary, me and my buddies were the first in the country doing fiduciary work. So, ETFs, consulting, pensions, 401ks, all that jazz. And so the whole point of it is the future of finance is here, and the traditional advisory model is gotten completely obliterated. It's gone. Financial planners are gone. Financial advisors in their current capacity are gone. Asset allocators are gone. And if you're either someone that has an advisor or you're an advisor of your own and you don't want to be a part of the attrition that is happening in our world, then this message is for you. And working with 10-7 Capital is for you as well. So a lot of this has really kind of come on over the last 30 days where I just said, I built some of the best financial firms in the country, whether they're RIAs, broker-dealers, help with investment management firms or whatever. And so what 10-7 Capital is, it's just me building my own now, right? And building our own. And when I look at everything that's out there and experience what I experience as a person, especially when you're sitting with people talking about finance and investment management and asset management, like most people don't have a clue about what their finances really are and what their investments are doing for them. They think because they have a golfing buddy or someone that is their friend, which is basically someone that's a glorified wholesaler, being their best friend, and giving them a financial plan, which the mathematics are 100% inaccurate on, you're setting yourself up for potential tragedy and financial tragedy. And it's more bankruptcy at the end of the road, right? And so now you have this whole shift that's happening in the world where, if you look at the statistics of what's happening today, 30 to 38% of financial advisors are going to be out of the business within 3 to 5 years due to retirement and old age. $30 trillion is transferring from baby boomers to millennials and Gen Zs.
Mm-hmm.
Robotics and artificial intelligence, and I'll use AI like very sparingly.
Mm-hmm.
I'll call it the next generation of technology and generational or generative technology, where it's programmable. You now have a system that you can mold its mind. You're going to get wiped out by platforms like BlackRock, Fidelity, and Schwab that can do a lot of this stuff. Oh, I do estate planning. No kidding. ChatGPT does now too. Right? Smart contracts. I don't need an attorney anymore.
And they're going to come up with their own like internal AI systems to like be like, hey, why don't you use our system and all that? But like, you can use any system. It's like
right. And the thing is, you have to remember when you're in a platform of that size that at the end of the day you got to feed the beast, right? Like in the inner walls of BlackRock, we had to feed the machine. So, as much as someone like Larry Fink talks about we're a fiduciary and we act in our clients' best interests, which I believe a lot of the time that they do, at the end of the day, it's still BlackRock is the entity, right?
Mm-hmm.
It doesn't matter who's the CEO. The living, breathing thing that needs to be fed assets is BlackRock.
So that's what you mean by feed the machine.
Feed the machine. You got to feed the beast. And that's why you have to be able to hold large companies and entities in check. And that's what independent organizations like ourselves do. So I just looked at it and I said, well, where's our bread and butter on client acquisition? Anyone can pick a stock. Like, how hard is it to buy Apple? Right? You get people that aren't going to do it on their own. And yeah, you can get professionals that'll do it better for you. But all asset management has been and is getting moved through Project Crypto to the blockchain. So now AI and this machine right here, like I could tell this machine right now, create me a better portfolio than Edward Jones' 60-40 managed portfolio. Merrill Lynch, Morgan Stanley, JP Morgan.
All of them.
And I can customize it and be told exactly down to the T and the penny what to buy. And then it's a question of, do I want to execute or not? So I've just replaced 90% of the work that financial planners and wealth managers do, because at the end of the day, their systems are sold around and built to sell around gathering assets under management and charging a 1% management fee.
Yeah, and obviously AI, and obviously like with AI, I've heard its detractors say all the time, oh, it'll make something up, it'll fill in holes or whatever. You can't trust it completely. But you can't trust human financial planners completely either. We've done several episodes on that now.
Well, as my buddy Trent says, that he was taught by his father, find a man's money and you'll find his motivation. So, yeah, it's great that they go play golf with you, but are they making you money? Like, how often does your financial advisor double your net worth? Oh, we look at the rule of 72. Great. I don't want to wait 72 years to double my money. I want to do it now.
That's insane.
Right? That's the question. How often is my net worth growing? And then it's not what asset level do I need to be at retirement. It's like, how fast can I have my money paying for my life? Right?
Mm-hmm.
These are questions. It shouldn't be like, oh, I got to accumulate $1 million to retire at 4%. No. At what point in time do I have enough cash coming in the door to where I don't have to work if I don't choose to, if I don't want to?
Yeah.
Right? So now let's talk about the advisory problem that every financial professional has out there.
Mm-hmm.
Financial advisors, what do? At the core of it, you do asset management, investment management. You sell a model, you charge fees based on assets. If you're really doing the work of a family office, and family offices are coming down market, especially in that high net worth, ultra high net worth, and especially the mass affluent, those advisors can't do 10% of what someone like us can do.
Mm-hmm.
And a lot of us are coming because we've built these new platforms that these advisors can't compete with. Yeah, you can get some cool technology and some cool reports and pie charts that make it look, oh, so great. Oh, look at what my money's doing. But where are your investments in spaces that are going to generate generational wealth? And I think financial advisory work is sovereign wealth advice.
And not just that, but wealth architecture.
Wealth architecture. I want to just drop advisory anyways, because we're way bigger in the scope of how we work with people than advisors. We're architects.
I mean, you updated your LinkedIn recently where instead of saying founder and CEO, now it says founder and chief architect.
Right, because I'm not really giving you financial advice. What I'm doing is I'm analyzing your position, whether it's business, family, charity, whatever, and I'm helping you craft, design, build, and implement your building and skyscraper.
Yeah, so it's a whole different type of thing from advice. It's not even really the same lane.
Way different.
Mm-hmm.
So now you just get into a whole different world. And, okay, so now we're watching all of the markets, stocks, bonds, cash, and we see that beautiful ticker on the bottom of the channel, and we're now going to see everyone's coming out with tokens. You're not going to buy Apple stock anymore. You're going to get Apple token. Robinhood's already doing this. They did it with open source AI or OpenAI.
Mm-hmm.
Oh, we own a ton of OpenAI shares, so why don't I create a token and give my clients exposure? Pretty smart idea.
Even casual platforms that people just use for like pleasure, like gaming or whatever, even they have like internal tokens now. Like it doesn't matter if it's business or pleasure or like food or travel, everybody's getting tokens.
The tokenization of assets is a game changer.
Exactly.
Okay, so 95+% of advisors probably know nothing about tokenization, know nothing about blockchain. They know nothing about crafting and architecting wealth.
Mm-hmm.
They know how to sell a product and a platform. That's why a lot of wholesalers retire and become financial advisors. And if you look at, the CFP and financial planning, it was just a bunch of teachers who were bored in the 70s trying to figure out a better way to make a lot more money, and they created financial planning. Hey, we could do this, and that's all CFP work is. It's glorified teacher work. So, okay, so now I've eliminated, and the market has eliminated, and technology has eliminated most work that financial advisors do. Gone. We already know that millennials and Gen Zers are not going to work with the same advisors that their parents had and their grandparents had.
Mm-hmm.
Those people are getting replaced, right?
I could tell you from my generation's perspective directly, we don't want old heads. We don't want talking heads. We don't want people who are legacy, who have entrenched interests. We want people with fresh perspectives because we have fresh perspectives. And if you don't match that philosophy, we're just going to see you as behind on the times.
Right.
And we don't have that kind of patience anymore.
Right. So now I have advisors, right? If you look at what Cerulli, this is Cerulli Associates and Investopedia, like the biggest research firm in the United States. Okay, let's talk about digital assets. And Bitcoin is the 500-pound gorilla in the room. As of what I currently pulled off of from Cerulli, 13.7% of financial advisors talk or recommend crypto. Only 2.6% of advisors give a direct recommendation and can give direct recommendations because they understand the space. I just told you we're all going to the blockchain. You look at the Michael Saylors of the world who own MicroStrategy and the big hedge fund people and all that stuff. They're all saying, listen, I mean, the SEC 2 weeks ago came out and said, we're moving the assets in the markets to the blockchain. Artificial intelligence technology is going to be managing money for people. It's all run by computers now.
In many ways, it already is.
And the advisory financial planning community only has 2.6% of their constituents that can actually have a meaningful conversation about the next generation of finance. Get it yet? Now, let's take the other services that advisors help on.
Sure.
Estate planning. Technology does that. It's called smart contracts. Most estate planners will be eliminated. Okay? Let's talk about tax minimization. Well, most advisors offer tax offsets and tax loss harvesting. Oh, we capture our gains at the end of the year and then we offset them with our losses. If I have $500,000 worth of gains, I better not have $5,000 worth of losses on the other side of my portfolio.
Because then you get nothing.
What are you doing here? I want to have the problem of when I try to go offset and tax loss harvest that I don't have anything to harvest there. Right?
Yeah.
So then if I have a big tax bill, whether it's through capital gains or high income for high net worth and high income earners, and I have a massive tax bill that I have to offset at the end of the year, okay, so tax loss harvesting isn't going to do anything for me. Great, now I got to jump into the alternative investment space and buy tax offsets, right? 1031 exchanges, opportunity zones, energy programs, all sorts of stuff. Okay, so great. My advisor could do that. No, they cannot. Because according to Apollo, a massive alternative investment provider, private credit, and real estate investment firm, right? According to their CEO, 91% of financial planners and financial advisors don't do alternative investments.
Yep. We've mentioned that before. It's still insane.
It's insane. I remember I had a conversation with someone from a group around here who, I'm like, what do you do for taxes? Oh, we do this. I'm like, so you do nothing. Like the whole financial planning advisory game, the gig's up. So if you're an advisor listening to this, you better change now because you're out of business in 3 years.
Exactly.
And people like us are going to put you there because I'm in a position now when I look at this that I'm going to sell against every advisor that's out there.
And there are already people and firms that are coming to us like, we want to know more about your outlook on this.
Right. And I just looked at it, I'm like, man, I spent so many years in corporate consulting with advisors that why shouldn't I be doing this again? And then I said, oh yeah, by the way, we have a whole new platform. Well, why don't I just recruit advisors?
Exactly, and we'll get to that. We'll definitely talk about that as well.
Right. Okay, so now digital assets, Bitcoin, wealth strategies, and now we have to talk about the difference in the way people are looking at and thinking about money. If you look at what's happening from a mindset perspective, hard work saving money is the least efficient, energetic way to generate wealth. Who the hell wants to work till they're 72? Bagging groceries.
Nowadays it's on the lower end.
Yeah. It's like, first of all, you're waiting to 72 for a pension or Social Security. It's worthless. I just did, your mom's pension.
Mm-hmm.
I'm like, okay, so if you wait another 13 years, you get an extra $800 a month. What?
Yeah.
I can make $800 a month just sleeping.
And that's the real indicator, is that they keep raising the retirement age. Around the world, they keep raising it.
Bingo. So the system is cracking. And now you have this new wave of people coming along, teaching people about, you only have to energetically align with money, because money's an energy and a currency. And if you get your alignment correct, you attract wealth, not earn it. So if that's the case, and just look up money manifestations, you'll get infinite amount of information on it. Whether it's accurate or not for me to decide. But now you're saying, okay, now you're just getting a next generation and generations of new people that are going to get $30 trillion worth of wealth that want nothing to do with financial advisory work in the traditional fashion. So you got, the next generations get $30 trillion worth of wealth. They want nothing to do with traditional advisors or their mom and dad's golfing buddy. And it's probably the fathers, right? Because, a lot of women have not been in charge of their finances. And now you have women that are coming to the plate, helping other women build their finances and, take control of their financial lives and securing their own financial lives. Like, the gig is up. And now from there, then it's like, okay, so if I can have robotics and technology do estate planning, we already determined that most advisors don't do anything with taxation. Neither do accountants, by the way, and CPAs. Very few of them do. And I could say that. I come from an accounting family, so I've been around accounting for a long, long time. And, okay, we've established that most advisors really don't do tax management. What else do you do? Well, I can get you insurance, great. That's going to be commoditized and already is. Well, what else do you do? I don't know. And that's the problem.
Mm-hmm.
And that's the problem we've solved.
Exactly.
We're the future of finance. We're the future of technology. We're the future of, I would say, financial architect work and sovereign wealth work, and helping people and families craft that and businesses. We're helping people establish their Bitcoin treasury at the core. I've already been helping friends in business that have been marginalized and had their profits slashed due to currency debasement, aka inflation. And we've demonstrated them and I was like, I only told them how to do it. I didn't really think about it until the Bitcoin conference at the end of May, where I'm like, we have to help people rethink their treasury and secure assets, right? Like, gold's outdated. Sorry, gold bugs. And we still work with a lot of people, and because we help people secure physical assets, gold, silver, numismatics,
and oil too, if you want to talk about Ethereum.
Yeah, oil. But Bitcoin is now basically the digital store of value. And when you watch someone like Tom Lee at Fundstrat go on CNBC like he did yesterday and say, listen, Bitcoin's market cap is going to equal gold, so it takes it from, what is it today, 1.2, 1.3 trillion, to it's got to be at least 22 trillion. So then the price of Bitcoin has to be at least in that model and scenario. That means Bitcoin's at least over $1 million. And then, as he would say, and I like Tom Lee's research, I think he's spot on with so many things. It's Bitcoin's greater than gold, because Bitcoin's is existing in a space that really doesn't have limitations. Web3 is infinite. There are no limitations to the web. We don't have the physical reality limitations and constructs that physical gold has.
And that's just that's just Web3. Like, there was a Web 2 before. I mean, imagine, Web 4 is going to be like, as technology keeps going. It's going to keep going.
And as someone like a Rick Edelman, who is a Hall of Fame financial advisor, and he's out there talking, and he's been in the digital asset space as well. And I was like, okay, so he now said, if you don't have Bitcoin and own crypto, you're the one that's speculative. You're the one taking the risk. You're the riskiest investor in the world. Tom Lee just said Bitcoin is the most valuable asset in the world. In not just the world, the universe. Because you could take crypto to space. And people are starting to look at space. Can't take gold to space, but you could sure take crypto.
Yeah.
Right? Okay. So now we're looking at it like, okay, we need Bitcoin. We need better treasury. We've already eliminated 90% of the work traditional advisors do. And we have to replace it with the work that truly needs to be done in helping people build their own buildings and their own wealth and be 101 million% completely sovereign. I mean, the United States government just bought 10% of Intel. If that doesn't scare the crap out of everybody, I don't know what to tell you. Like, how is it possible and accepted that we allowed the United States government, and last time I looked, I'm a resident here and a citizen, and I have a constitutional right to criticize my government? Where do they get off participating in private business.
I mean, this is literally what China has been doing for decades. Now they're...
Bingo. You are now China if you live in the United States. Now your sovereignty as an individual and as a family matters. We are no longer the free country of the world.
Oh, you can't say that. Your social credit score has gone down. We're taking your passport.
I don't care. I don't need a social credit.
They are actually starting to do that too. They're taking passports.
Whatever. The whole point is now sovereignty of the individual is of the utmost importance and matter. This is an area of the world where that should have never happened. Right? And I don't involve myself in politics. But I involve myself as a human being for other humans. And that should frighten the crap out of everybody that hears this. Our markets are no longer free markets. And that was the final nail in the coffin. Forget the fact that they got hijacked in 2008 and have been living off of liquidity, right?
Yeah.
Like if you were to take all the liquidity that's in the system and pull it out, that's been injected since 2008, like the Dow right now is 45,308.5614, whatever. I bet you the real value of the Dow is probably closer to 12,000.
Yeah.
That's how inflated the system has become. So
they scapegoated Enron, but now it's all Enron.
It is. So you now have one of the top advisors who actually is on the front wave of the digital asset space say 10 to 40% of all people's investments need to go to digital assets. You have Ray Dalio, who was the founder of Bridgewater, right? One of the best hedge funds of all time. Say 15% has to go to Bitcoin and gold. Okay, where's that money coming from? Stocks and bonds, baby. Like I saw a report this morning where the banks are trying to stop the Genius and the Stablecoin Act because the stablecoins are going to suck out $6.6 trillion worth of capital out of the banking system.
And that's going to be fun to watch too, because
this is why Jamie Dimon at Chase and JP Morgan hates crypto, because it's the end of his business. All the bankers get fat off of fees. And I worked inside of a bank. I would never put my money in a bank.
And that's going to be funny to watch too.
You think I'm bad? You should talk to my COO, who ran compliance for a branch at Bank of America.
Yeah.
He even says don't ever put anything in the bank, not even a safety deposit box.
Yeah. No, but that's going to be funny to watch too, because because the banks are trying to stop these acts. These acts, when they first passed, they got, bipartisan support. Everyone was for them. There were some questions, but everyone at the end, came together to support them. It's going to be very interesting to see. Not only if you look, because obviously the voting tallies are available publicly, to look and see who voted against it in the first place, but also who now is going to be changing their tune.
They're in the game.
Because that's how you know who's bought and who's not.
Right, they're all in the game now. So, okay, so now we have Bitcoin treasuries. Everybody needs it, whether you're an advisor or an investor. You now have to have sovereign wealth that lives, breathes, and exists outside of the traditional system, because that's the only way your family can survive generationally. We already destroyed 90% of financial advisors that are doing traditional business today, and even more than that, because if only 2.6% of advisors, according to Cerulli, can do anything related to crypto, that's a massive amount of population that has no idea what's coming.
Exactly.
And it's all because they got fat charging fees. I got an asset management fee. I hate asset management fees. We do a hybrid model because we do so much work outside of investments that we need to get paid for our time.
Yeah.
And especially for like advisors, and we looked at it, we said, okay, how can we really take what we're doing to the next level? All right, so I have a firm, my money's at an advisory firm, they're making money off of me and selling me a financial plan. okay, let's say I think it works and I'm doing okay, and my returns look great, but the numbers on the statements never truly reflect what comes back to me in my bank account because I have to pay at least 15 to 20% of everything back to taxes. So actually the balance I get on my Fidelity statement is 20 to 40% less in real value than what they're showing me because we're not showing tax implication, right? Well, but let's not talk about that. Hey, I got $1 million. Yeah, you really don't. And then if you're an advisor, you're sitting there, well, by the time my platform gets around to the crypto space, it's going to be too late. And when you're an individual or someone that's trying to build sovereign wealth and family wealth, I don't want an ETF. I need ownership. You need ownership of the asset. And we just demonstrated only 2.5%, 2.6% of advisors in the country can do this. And now if you're an advisor with a platform, you can't do it. So I said, hey, let's solve for that too. I funded my own crypto fund with my own money 5 years ago, 6 years ago now. I have a 1, 3, 5 year track record. Mm-hmm. So now I can say, okay, you as an advisor, you can't do crypto. You know nothing about it. But this is going to destroy you unless you do something about it. I get what it's like to work with advisors. So why don't you give me your crypto money for your clients? We'll manage it for you. We'll take on all the risk and I'll pay you a referral fee. Bingo. So now you're in, when you look at the S&P and NASDAQ as compared to benchmark compared to Bitcoin over the last 1, 3, 5, and 10 years, Bitcoin eviscerates the S&P 500. It eviscerates the NASDAQ. And everyone is like, kind of like, it's like the blind leading the blind. Everyone's like, oh, Warren Buffett said you should put your money in an index fund. No, that's not what Warren Buffett said. Warren Buffett said, if you're an ignorant investor, buy an index fund because most people are ignorant investors. And they get you on the social media stuff because everything is a soundbite, right?
Yeah.
Everyone's like, oh, I heard my entire life, oh, pigs get fat, hogs get slaughtered. What? You missed the most important part. But the sheep get fleeced. Right?
Mm-hmm.
Pigs get fat, hogs get slaughtered a little over the top, okay. But the sheep that follow, they're the ones that get fleeced. For myself and my family, I don't want my investments getting fleeced and my assets getting fleeced.
Mm-hmm.
We're in a totally different world now. The structures of everything that's existed since World War II is falling apart.
Mm-hmm.
This is kind of like the Billy Bean moment in Moneyball. Adapt or die.
Yeah.
If you're an investor, adapt or die. If you're an advisor, adapt or die. And any constraint and limitation you have that is holding you back from making this shift, you better make it in a hurry and drop every limitation you have. Because this is a $30 trillion plus tidal wave, right?
Mm-hmm.
We're seeing digital assets are consuming all other assets across the world. We're watching in real time people sell their assets, stocks, bonds, cash, real estate. They're even taking loans against them, and people are going to buy Bitcoin because it's digital gold. And like Tom Lee from Fundstrat said, it's bigger than gold. It probably has a real value closer to 2 to 3 million. And we're sitting at 100,000 today. And this asset class has been around for 17 years. And it'll be around for at least another 50. It's not going anywhere.
Yeah. So you mentioned on that note, you mentioned, what we're doing for other firms in regards to, their crypto and their clients that are managing that kind of stuff. I'm curious to, because I mentioned this at the beginning, walk us through sort of the projects that we've been working on. Walk us through, kind of like what what you think you can tell everybody at this stage about what we're doing, where we're looking, and, what they can expect from us in the near future.
Yeah, I think first and foremost, we're going on a recruiting stage. We're going to recruit new families we work with, new businesses, and new advisors. especially new advisors. I looked at the market, I looked at our business at the core, and I was like, you know what? 99% of what we do is fee-based. We don't really do any commission business. I laugh at like the Fisher investment thing because it's like, we're a fiduciary. Our fees align with you. If you do better, we do better.
Oh boy.
Yeah, but I can't take my money out from you because if I do, you lose money, and then you do everything in the world to make sure that I don't take any money out, right? It's like, a friend of mine that I gave him some advice on what to do from a tax strategy.
Mm-hmm.
My advisor told me it's not worth my soul. Yep, he got a $65,000 tax bill.
Uh-oh.
Oops. All because his advisor couldn't afford for assets to go out of their payment and their fee structure. So no, AUM-based fees do not align with what's in the best interest of the client. It actually works against the client. So our fee structures are completely changed. Who we work with, how we work with people is completely changed. We're traditional finance, we're completely out. We are about creating sovereign wealth for people without borders, boundaries, and limitations.
Mm-hmm. And we're all in-house as we do it.
We're all bringing and taking everything in-house. We're at the point where now every client of ours is going to have a portfolio manager to custom manage all of their accounts, which will include digital assets, alternative investments, tax strategies, stocks, bonds, cash where it makes sense, although it doesn't make a lot of sense in
today's world.
In today's world. So then you have that work that's being done. Everything's delivered through a technology system that encompasses everything a client can ever think of. And then from there, it's like, okay, what's the playbook? Well, the playbook is actually getting published. We wrote a book.
You want to talk about the book?
Yeah. My first financial book. I just happened to sit down one day and write it.
Just came to you.
Like Dre. Been in the lab with the pen and the pad. And
he loves his Dre.
Yeah, I'm a huge Dr. Dre fan. So it's not a traditional finance book. It's if I was going to architect my family's future, what does it look like? And so it's like 12 chapters plus bonus, maybe 13 because I have a forward or whatever. But 13, 14 chapters. And it talks about, it's literally almost like a checklist where you could go through chapter by chapter and say, do I have this? Do I have this? Do I have this? And it's a roadmap. Like how to build your own family office and how to build your own sovereign wealth in today's times. Mm-hmm. And the cool thing is, I can hub and spoke it where then I can carve out chapters and go into the weeds on every single topic that there is. But it's meant to serve as something that can sit on your phone, sit on your tablet. You can have access to it. Not everything is going to apply for everyone, but 90% of it works across the board. Mm-hmm. And you can always go back to it.
Yeah, and we'll obviously talk about it more when the official announcement comes out. We'll share more details about, where you can find it, how you can find it, but we're going to get it published. There's a lot of different ways that you're going to be able to access it, so look forward to it.
Yeah, and we'll hit the right pricing on it. Like it'll be published digitally first, then we'll have, different variations of it. Our top clients are all going to get it for free. Mm-hmm. And, we'll have special editions and all that stuff.
Yeah. Speaking of special things that are related to digital, do you want to talk about our fair lady?
Our fair lady's coming soon. Her name is Nura107. So this project's going to take a little bit longer because there's a very steep learning curve, and I'm actually going to work with a couple of people to help get this done. So I just said, okay, I actually came up with this idea after I watched some of Deepak Chopra stuff. Mm-hmm. If you ever know Deepak Chopra, big spirituality guru, Indian, which is funny. Believe it or not, one of our clients was his roommate in college and med school.
No kidding.
Yeah, no BS on that one. It's crazy. So, anyways, what Deepak did is he took his entire experience and mind from the spirituality perspective, and he built himself into an AI. So I'm going to take my 41 years of finance and put it into this brain. And people are going to have the ability to interact with this brain. And it'll cover the entire gambit of financial questions. But it will have a very, very inside look and honest truth about what finance is, what money is, what energy is, and what it is not.
Mm-hmm.
Right? It's almost like my one friend I used to work with at BlackRock said, it's like, and I don't do this on purpose, it's just my default, but he's like, you're just a nonconformist, right? I was never a follower.
Yeah.
My dad taught me as long as I can remember, be the leader, don't be the follower. Be the leader, don't be the follower. And it's hard because you have to stand alone. But at the same time, you're like, man, when you can see what's available and what's possible, it's crazy. So then we're going to be able to bring this into our ecosystem, right? And then from there, talking about the tokenization of assets, I said, okay, what if I can collectively create my own coin, token, I can give it to my clients and anyone involved at 10-7 Capital, and it gives them a share of ownership.
Yeah.
Right? And we can use it. We can issue tokens, we can raise capital to do private investments, we can do all sorts of things in terms of raising capital with it. And then at the same time, anyone that participates in it, what if I can create a higher earning income product? Yields and distributions, and it's almost like dividends on a stock. So then if you're inside of our ecosystem, you make money off of us doing well.
Exactly.
I think that's a better model than Fisher Investments. Oh, our fees align. Well, this is even better because it doesn't matter if we're always growing and what your accounts do, because if we're all doing well and doing well together, everybody participates.
Exactly.
It's almost like a communal co-op.
And that's the biggest thing, is that's just where finance in general is going.
But the problem with finance and traditional finance, it's so bureaucratic, it's going to take time to get there.
For sure. And
So
we'll talk more about that in future episodes as well.
Yeah, so then it's like, okay, you now have the next generation of wealth management. It's sovereign wealth architecture, right?
Mm-hmm.
And from there, it's just helping people like, okay, so I don't want to share all my ideas because I think these things that have come to me are pretty unique and no one's doing it.
Mm-hmm.
But especially if you're either an investor or an advisor, we can help everybody. And we have a fee structure that benefits everybody. And we have a system, and we're going to have a co-op structure that benefits everybody. So anybody that's involved in our ecosystem, everybody benefits. And I think that's just the energy of tomorrow's world that's happening. We're kind of watching this old 100-year system fall apart. We're watching fiat currencies across the world fall apart. There are always going to be pain points for transition and change. You're seeing the biggest wealth transfer of all time. You're seeing the next generation of technology, healthcare. Shoot, your mom was telling me yesterday what they're doing in stem cell. You don't even need a prescription or anything.
Yeah.
Like, you just walk in, get stem cell in your knee, and boom, you have new cartilage. All right, great. So now we're going to live to 300 years. Right?
Yeah.
So apparently we're going to start exploring space at some point if we ever get out of our own way. The money and management of the future and technology of the future is here. And there's just a massive opportunity for everybody to pursue whatever they want to pursue. And like when we talk about it from the investment management perspective, like the traditional pitch books were, hey, we're doing performance reporting and we're outperforming everybody else, right? Next generations don't give a crap about that. The next generations are willing to give up a couple points if there is some sort of charity or service behind what you're doing.
Yeah.
Right? So then we solve for that as a financial firm because everybody that's within our ecosystem is going to benefit. So then it's not just that we're helping people create wealth, we're also helping them participate in an ecosystem that they believe in, and we're bringing the benefits to all members that participate.
Exactly.
And now our ecosystem is not constrained to just individuals or businesses. It's financial advisors, financial consultants, anybody that can't do a lot of this stuff, especially the digital asset stuff.
Yep.
We can take that off your plate. You don't miss this market. You don't lose clients over it. And at the same time, you get to replace what would be lost revenue for yourself.
Exactly. So it's like we said in episode 1. Watch this space, stay tuned, because we're ahead on the curve.
Yeah, and when I'm talking about a lot of this stuff today, I just have different people in mind that we're having conversations with. Like, Bitcoin Treasury is the most important thing in finance right now. It's like an arms race for now, countries, companies, people, individuals, institutions to acquire Bitcoin.
Yeah.
It doesn't matter what the price is. You don't even worry about it. The only thing that matters right now is acquisition. So if you're an individual out there, how do you build your core treasury that used to be high dividend, high yielding, stocks, bonds, and cash, which we now live in a system that has become worth very, very little or not worth enough to validate you putting your money there. How do you rebuild it?
Exactly. And we'll definitely mention that in a future episode as well. I'm definitely excited to talk about that topic in particular.
Yeah, and I was trying to find it. Let me see if I can find this quickly.
What are you looking for?
I was going to look at... So there was a posting by Mark Moss. He's a person I follow. I actually met him at Bitcoin in Miami years ago. He's a real smart dude. I like his research a lot and how he thinks about things. And he posted, because in the advisor world, Bitcoin's the 500-pound gorilla in the room.
Yeah, now you mentioned that one.
Okay, so over the last year, the NASDAQ was up 20%, Bitcoin's up 75%. The numbers are just ridiculous. So every investment now is benchmarked according to Bitcoin, because over the last 10 years, Bitcoin is the highest performing asset class when measured in fiat currency. It's the best performing asset in the world relative to everything.
Mm-hmm.
It's just weird to watch this.
Yeah.
So if you're not adapting, you're about to die. It's the Moneyball moment, like adapt or die.
Exactly. So I think...
Crazy that I'm even saying this.
But yeah, I think we'll kind of end it there. Obviously, a lot of this stuff we'll be going into more depth on in future episodes, but that's kind of a basic look into, where we've been, what our outlook is going into the end of this year and the next couple of years going forward, and, some of what we're working on, what we're some of the projects that we're doing. So, any final remarks you want to put out there?
No, thanks for listening. I think...
Thanks for staying with us.
Yeah, I think our next couple of sessions, I think the podcast and the information we share is going to be... We're just going to try to bring stuff that's next level. And if you're out there, whether you're, a financial professional or even, building your own family wealth and your own wealth, we're going to share ideas of what we're seeing on how to create sovereign wealth.
But yeah, as always, this has been Crypto and Cocktails, the official 10-7 Capital podcast. My name is Tyler.
Timnihill.
And hope to see you along the ride. Hope to see you soon. Let's close out the year strong.
Go Bills.
Exactly.